In the last decade, LEGO investing has emerged as a surprising trend, attracting hobbyists and speculators alike. Many have begun to treat LEGO bricks as a serious financial asset. Some even compare LEGO performance to traditional investments like stocks or real estate. But beneath the allure of nostalgia and a few headline grabbing success stories lies a much less glamorous reality. In truth, LEGO investing is not only fraught with risks, but it also fails to meet many of the core principles of sound investing. This video explores in depth why LEGO investing is generally a bad idea for most people. Illiquidity. So now you spent your cash reserves on some 50 LEGO sets. Even worse, you might have taken a loan to buy into this because, and let me do the voice right, well, LEGO appreciates more than gold and even S&P 500, so it makes sense to loan at 10% because LEGO will net me 30% per year, so it's just smart, right? While I don't want to contradict you necessarily because the principle is as sound as an ice cream on a hot summer day, your car breaks down because they do, or your house needs repairs because they do, or you need to go to the doctor because the real cheap meat that you've been cooking to try to save money was spoiled and now you're sick. But you have no cash reserves and you can't make a small loan because you were smart and invested it all into Lego. So now your choices are what? 1. Sell a kidney, which is fair but only works one time. 2. Work a third job because you already have a second one. And 3. Sell some of your Lego investments. You might even kid yourself and think, hey, I paid 60% retail for my sets, but they are not retired yet, so I can probably sell them to some schmuck for retail price and I'll just have a smaller profit, but profit nonetheless. And then you try to do that and you fail miserably because you didn't think this through. Lego is not going to sell at retail while it's not retired yet because there's a lot of retailers which dump it regularly for at least 20% off. And people tend to favor stores where they can return items in case of fraud versus your business like person, which they will probably never see again in their lives. So now you're stuck in realizing that if you want quick cash from your Lego investment, your only option is to sell to other dealers who have the cash and willingness to sit on the sets instead of you. Only problem is they offer you 30-40% of retail value, so you're losing money for sure. Perhaps most significant issue with Lego investing is its lack of liquidity. In finance, liquidity refers to how easily an asset can be converted to cash without impacting its market price. Stocks, bonds, and even cryptocurrencies can be sold almost instantly. Real estate, although slower, is backed by tangible utility and demand. Lego, in contrast, is notoriously difficult to sell quickly, mainly because it's a luxury item, not a bare minimum necessity to live. To sell a Lego set at a profit, you often have to photograph and list it on a platform like eBay, Bricklink, or Facebook Marketplace. Wait days, weeks, or even months for a buyer. Deal with haggling, buyer indecision, or transaction fallout. Pay shipping costs, platform fees, and taxes. And if you're unlucky, a minor dent in the box can result in a 30% value drop, especially for sealed collector sets. This lack of liquidity makes Lego a poor choice for anyone looking to build a portfolio with flexible exit strategies. Market volatility and speculative behavior. So, let me get this straight. You go to YouTube and there's some Lego influencer there who tells you that this set, Boba Fett's toilet, is amazing and well worth the price and will surely spike in price after retirement. And oh my god, jump on the bandwagon right now and buy as many as you can. And by the way, he will have a video next week saying exactly the same about another set, but let's not think too much about this. Well, you buy 100 copies of this set and then you go to your friend's house where he has a small party for all of you Lego investor types, and while munching on a sandwich and enjoying your energy drink, he tells you that he just bought 200 of Boba Fett's toilet sets. You are amused and ask him why did he do that, and he tells you that he saw this great video made by a guy who kinda knows what he's talking about and that's why. And your next two Lego investor friends that arrive tell you that they also bought a couple of hundred Boba Fett's toilet sets, and you're all giggling and kidding about it because you're too stupid to realize that if you four did that, then there's surely a few more guys out there that did it too. So When retirement for that set comes, you try to sell it for a good profit, but you keep getting outbid by people who sell cheaper than you, and there's only two solutions. You either wait a few extra months or even years for the stocks to clear and the price to bounce a bit, or you just go down full moron mode in price wars, which will surely end in you selling at best at a minor profit. Because people buy into the hype and you should stay away if that's the only reason why you're buying into a set. A defining feature of Lego investing is its speculative nature. While some sets do appreciate after retirement, others do not. Many hover near retail price or even drop in value. This variability is often driven by unpredictable factors like pop culture trends like a show revival or character popularity, sudden re-releases by Lego, which have happened a lot lately, fan sentiment, and even YouTube hype or influencer promotion. For instance, sets tied to media franchises can see price booms following a movie release, only to crash as the cultural moment fades. The Baby Yoda set spiked in price during the Mandalorian hype, but cooled off quickly afterwards. Unlike the stock market, where fundamentals, earnings, and macroeconomic indicators provide context, the Lego market operates largely on emotion and artificial scarcity. Investing in Lego, therefore, becomes more of a gamble than a calculated financial decision most of the time. Storage, preservation, and physical risks. Yeah, storage. Lego sets need a place to be kept safe, cool, and dry. Nobody really talks about this, and there are a few investors that preview their storage spaces. Even then, you are not informed of the dangers that are always lurking in the shadows, ready to screw your Lego set investment. Number one, children. Those little buggers don't care about your precious Lego pieces and will not miss any opportunity to turn your new inbox Cloud City set into a "Daddy, look what I built, isn't it nice?" moment that will be forever etched on your brain. Number two, pets. If you have dogs, any boxes up to waist size are fair game. If you have cats, any boxes from the waist up are fair game. And what can you do? Look at those eyes. Can you just not forgive them? But the most dangerous creature of them all, your wife. This beast comes around with a triple layer threat factor that you need to account for. First, you need to explain to her why that nice empty room or basement has to be simply cut from the day-to-day activities with entrance forbidden to all except the chosen. Second, if you do manage to secure a nice location, then you have to explain to her what is it that you're actually doing. Yeah, you will store those nice Lego boxes, kid stuff, right? For a minimum of 2 years until they retire and the gazillion other sets that other investors bought are sold and prices going to the green. But that's a lot of trust your wife has to place in an individual that can remember where the measuring cups are placed when you're done with them. And thirdly, even if you succeed in both of the points above, there comes a point in a man's life when he will come face to face with her indecision. Are you sure you still want to play Lego Investors? And can't we turn that room into a guest room so that my mom can visit us more often? I know, but what about storage solutions? Why can't I just rent a place to store my Lego sets? Dude, did you just check out the cost of renting even a small deposit room? And secondly, are you gonna trust that there's no leakage or nothing to endanger your precious sets? I mean, honestly, I'm like a dragon guarding a gold trove with mine. I just hoard them close to me and always watch them, and even then I'm stressed. Investing in physical Lego sets means you have to store them. This might sound simple until you realize the scale required to generate meaningful returns. A decent sized Lego investment portfolio can easily occupy entire closets, basements, or even rooms. Storage also has associated risks, like climate control, because humidity and heat can warp boxes and bricks, pests, dust, UV light damage, which discolors basically the boxes and they don't look pristine, and of course, fire and flood hazards. Then there's the challenge of keeping sets in investment grade condition. A small tear in the seal, dented corner, discoloration can turn a $500 mint set into a hard to sell item at half the price. Hidden costs and transaction fees. Okay, how are you going to sell all those sets? Have you thought about that? Because for the majority of the new Lego investors, the obvious choices are sites like Craigslist or Gumtree or whatever you have in your country. Then there's the special ones that live in big enough cities that Facebook Marketplace is actually usable, although sometimes it's a real pain in the ass as you really get to know human nature after the fifth message going like, hey, can you get any lower because I am sick and I need to feed my children, so please, or even better, can I get this for free? Yeah, if you've never experienced haggling, I think you're gonna be in for a treat. And anyway, the third option would be professional selling platforms like Amazon, eBay, or Bricklink, which, by the way, come with some more setup time, their own rules, and of course, fees. When you buy Lego sets to hold or flip, the real pain begins when you go to sell. eBay has 10-13% fees on final sale price. PayPal, Stripe, they get 2 or 3% processing fees. Bricklink has platform and PayPal fees. Shipping costs, especially for large sets, but let's say you include these in the final price. How about packaging materials, boxes, bubble wraps, tape? If you're flipping sets and relying on a 25% appreciation, these fees can turn a profit into a loss. Worse, the time investment required to list, manage, and ship orders is often not factored in. Your effective hourly rate could drop well below minimum wage. You need to think about how you're going to wrap and prepare a package and how long does it take to get one done, and then turn it over to the post office or your local courier. Even a simple small box package has some hidden costs of the box, the wrapper, because you are going to wrap it in something, right? And the tape scotch. And look, I'm not saying it's going to break the bank, but the cost to do so add up. Opportunity cost. What you could be earning elsewhere. If you don't know what opportunity cost is, then you have no business investing in anything, let alone doing it with Lego. To put it simply, let's say you have $10. If you buy a Lego set right now for $10 and sell it next year for $20, you've made $10, essentially doubling your money in 1 year. But what if you sell it for $20 2 years after purchasing it? Well, then you've doubled your money again, but you did it in 2 years. But what if you could have bought stocks for $10 and after 2 years those stocks are worth $100? That's a 10 times appreciation on those $10 instead of just doubling it with Lego. And okay, these scenarios are definitely made simple so everybody can understand. Opportunity cost is rule number one when you want to invest and multiply your money. You invest in thing A and you're happy with it, but what if investing in thing B would have made you more money in the same time frame? Well, that's opportunity cost that has just been imposed on you. Perhaps the most important reason Lego investing is a poor financial strategy is this opportunity cost. Every dollar spent on Lego is a dollar not invested in stocks, ETFs, real estate, or even your own skills and education. Traditional investments come with historical returns, transparency, and scalability. Consider the long-term power of compound interest. The average stock market return over the last century is around 7 to 10% annually. A $1,000 investment in a low-cost index fund could double in about 7 years and quadruple in 14. Lego sets rarely offer that kind of compounding return without immense effort, risk, and physical storage. And hey, if you can handle this, then by all means. But if you don't, then really think about it. Moreover, stocks pay dividends, real estate generates rental income, and even bonds offer fixed interest. Lego, on the other hand, offers no passive return. You only make money once, if and when you sell the set, and only if you sold it at a profit. Saturation and decreasing margins. The worst thing that you could do is just take a few $1,000s or euros and randomly buy some Lego sets, thinking, hey, this is easy, right? Well, wrong. For example, look at this guy. I got a random internet caption from an investing group. I invested around $6,300 into Lego sets with the MSRP of the sets now around $8,300. Selling locally, they move slow and I would like to cash out and maybe redirect my cash to another investment. Well, newsflash. Cashing out fast means you're not going to be selling at a profit, but at a loss. And the only question is how much of a loss. Not to mention, it is clear that he didn't really buy discounted sets, because if he would have spent $6,300 on 30% discounted sets, he would have had at least $9,500 now in retail value of the sets. Suffice to say, there's plenty of dudes like this who sadly don't do their homework before jumping in at first, and then they quit along the way with a hefty money loss as well. The Lego investing market has become increasingly saturated. As more people catch on, the pool of flippers, hoarders, and wannabe investors grows. That means more people buying multiple copies of the same set, holding them, and trying to sell at the same time post retirement. This influx leads to lower resale margins, race to the bottom pricing, longer holding periods, and of course, increased competition for buyers. What was once a niche strategy has become a crowded field, and the illusion of scarcity is fading as every would-be investor tries to get in early. Emotional bias and misjudgment. Lego is a nostalgic product tied to childhood memories and pop culture. Because of this, many investors make emotionally driven decisions. They buy sets they love, assume others will love them too, and ignore data that contradicts their assumptions. This leads to biased investing, overpaying for personal favorites, holding on to losing sets too long, chasing hype, and ignoring storage and resale realities. Worse, many online communities and YouTube influencers feed this optimism. They highlight only the success stories, rarely showing losses, failures, or break even investments. This creates an echo chamber of confirmation bias, luring newcomers into a misleading narrative most of the time. I mean, of course, most people just want to advertise their successes because that's the only thing that sells, especially if you want to sell courses where you teach people how to make money doing this. But be wary of anyone trying to sell you anything while he shows you his amazing returns. Most of the time, people will simply say, well, I bought this for $50 and I sold it for 100, so here you go. But again, they're not really advertising that they sold it on Amazon or eBay, that got a hefty cut of the sale. And they won't tell you how much time they had to sit on that set until they got that sale. And these are crucial details to judge if they've actually made the profit, or if that profit is so small they would have been better off just buying gold, for example, and waiting for it to appreciate. The unpredictability of Lego as a company. The Lego Group is a private company, which means their internal decisions are not transparent. They don't disclose production runs, reissue plans, or retirement schedules. As a result, investors operate with limited information. And when Lego does make decisions like re-releasing a once rare set, it can devastate secondary market prices. You're at the mercy of a company whose main goal is not to protect your investment, but to maximize accessibility and profit through product cycles. That's their job, and it makes Lego a dangerous asset class for long-term investors. I mean, I won't go into the details of Captain Rex Venator versus Microfighter set again. In my mind, Lego is on the right path when they release rare minifigs in affordable sets. Taxes, regulation, and legal risks. Depending on your country, profits from Lego sales may be taxable. Casual sellers often overlook this, but once you start flipping regularly, the government may consider you a business. That means income tax on profits, sales tax obligations, record keeping requirements. Failure to comply can result in penalties, fines, or audits. Many Lego investors operate in a gray area, not realizing the legal responsibilities that come with selling goods for profit. I could not stress this enough. Most of the time, the government doesn't care if you sell things like around $100 a month on eBay or other places. However, you're in this for the long haul, right? You want to get rich, right? So what's the end game when you start selling $1,000 a month or $1,000 per week? The IRS will be quick to notice all those transfers from eBay or PayPal to your account, unless you're all doing cash transactions, which is guaranteed won't happen if you sell on eBay. Are you prepared to justify your sales and pay taxes on them? Have you calculated how much does this eat into your profits? Or if you say, screw it, have you assumed the risk of paying a hefty fine that would basically nullify all your hard-earned profits until now? You need to have a plan and you need to factor in taxes into that plan if and when you're going to grow so much that people will notice. Timesink and burnout. Lastly, Lego investing can be incredibly time consuming, from monitoring deals and retirement schedules to tracking inventory, packing shipments, and answering customers' questions. It's a job. If you're doing it at scale, it can take hours every week or maybe even every day if you're successful. What started as a fun side hustle or hobby can quickly become overwhelming. Many investors report burnout, stress, and regret once they realize the time commitment and diminishing returns involved. I do find this true, especially with brickling shops. I mean, obviously, I wanted to open a brickling shop myself. However, after sorting around 25,000 pieces into my sorting containers, I realized that took me the better part of 50 hours over 2 weeks, and my back hurt. And then I started to think, what would a brickling shop mean? Well, for a reasonable 50 to 100 pieces order, which is not on a single brick type, you could look at even 10, 15, or even 20 minutes of going through the Excel sheet, finding out where the pieces are stored, getting up, going to the storage box and pulling them out, preparing the package, printing the label, and making it ready to ship. And for what? For around $3? I exaggerate, of course, but never underestimate the time it takes to actually run a business. And don't kid yourself, most of online retail businesses involve a lot of packing and shipping, if done right, of course. As a conclusion, buy Lego for passion, not for profit. Lego is a fantastic toy, a brilliant form of creative expression, and for many, a beloved part of their childhood. But as a financial investment, it falls short in nearly every category: liquidity, consistency, predictability, scalability, and long term value. While a few sets may offer short-term gains, the overall Lego investing landscape is fraught with risk, high effort, and low predictability. Instead of treating Lego as an investment vehicle, it's far healthier to view it as a hobby. Build what you love, collect what inspires you, and sell occasionally if it makes sense. But don't buy into the myth that Lego is a reliable way to build wealth. For that, the real bricks are in financial literacy, disciplined investing, and a diversified portfolio, not a sealed box in the back of your closet. In the end, Lego may build great models, but it's a shaky foundation for your financial future unless you have a solid plan under your belt. But about that in another video. Thank you very much for watching. Leave a like, comment, and subscribe, and maybe next video will be why Lego investing is a good decision. Take care now. Bye.